Picture this, it's 2000 BC and you're in Mesopotamia. Instead of standing in line at the bank, you're actually in a temple, because that's where the first banks were. Temples were considered safe because, well, who's going to actually rob God? Back then though, people didn't deposit only money, they deposited grain, livestock, or even silver. Temples acted as a combination of a vault, a lending office, and a spiritual hotline. If you defaulted on your loan back then, let's just say divine punishment wasn't on your side. Ancient Egypt also had a form of banking where granaries stored surplus grain. These granaries issued receipts that could be traded or redeemed at a later date. It's the first real version of a savings account, except your balance could be eaten by rats. Yeah. Fast forward to the ancient Greeks and the Romans, where the first real bankers showed up. They were called trapezites in Greece and worked off tables in marketplaces, kind of like a pop-up bank, except instead of free pennies, they offered loans and currency exchange. The Romans took things to the next level by creating laws around banking. They even had the first instance of what now could be called deposits and interest rates. And yes, even back then, interest rates were probably higher than you like. Of course, there was no credit score back then. Your reputation was your collateral. If you didn't pay up, let's just say the collection process was a bit more hands-on. Meanwhile, in China, the use of paper money began as early as the Tang dynasty. Around the 7th century, merchants found carrying large amounts of coins impractical, so banks began to issue paper notes backed by deposits. This was a revolutionary idea that would eventually spread to the rest of the world. In the Middle Ages, banking really started to resemble what we're familiar with today. Enter the Medici family in Renaissance Italy. Now everyone knows them as the rock stars of banking. They created the first real banking network across Europe. Think of them as the original too big to fail bank. Medicis made banking a family business, and they were the first to use double entry bookkeeping. That's when you record both debts and credits. This is the time where accountants started pulling their hair out. This period also saw the rise in merchant banks, which specialized in financing trade. Ships carrying spices, silk, and other goods were often financed through banking institutions. It was a high risk, high reward, and if your ship sank, well, let's just say the banker wasn't too happy. Meanwhile, in the Islamic world, banking developed under the Sharia law, which prohibits charging interest altogether. Instead, banks used profit-sharing models and other innovative finance tools. It was a completely different system, but just as effective. Now, we leap forward where the real changes started to happen into the 18th and 19th century. The Industrial Revolution was in full swing, and so was banking. Suddenly, there were banks for businesses, investment banks, and even central banks. Think of this where banking actually became for everybody. Central banks, like the Bank of England, were set up to manage the national economies of currencies. This is where paper money became widely used. Before this, if you wanted to buy a house, you'd need a wagon of coins and a few bits of paper. But now, it was everywhere. The Rothschild family became synonymous with international banking during this era. They financed everything from wars to railways, and their influence so vast that conspiracy theories about them started to circulate and still circulate to this day. And this also was the era when overdraft banking became a thing. And this is what built you a buffer for if you accidentally overspent. Now, in the 20th century, banks evolved faster than ever before. From personal checking accounts to credit cards in the 50s, banking became more and more about convenience. By the 1980s, ATMs made their first debut. Suddenly, you could actually withdraw cash at 3 a.m. This is the time where investment banking took off, for better or for worse. By the end of the century, online banking appeared, and suddenly you didn't even need to leave your house to manage your own money. During this period, regulations like the Glass-Steagall Act in the US aimed to separate commercial and investment banking. By the late 20th century, many of these restrictions were lifted, setting the stage for some of the financial crises we were to see later. Now we're in the 21st century. Banking has gone digital, and the apps have replaced tellers. Cryptocurrencies and blockchain technology is starting to shake up the industry, and decentralized finance, or DeFi, is now the new buzzword. These days, you can send money across the world in a matter of seconds, earn interest in a digital wallet, but with great conveniences come great responsibility. Cybersecurity is now the name of the game. Neobanks, which are entirely online, have emerged as alternatives to traditional high street banking. And let's not forget the rise of the ESG-focused banking. rankings, which banks prioritize environmental, social and governance principles. And one of the biggest changes is the dropping of the PIN, where you can use tap and go technology, because who's got time to type in a 4-letter number? So there you have it, a brief history of banking, from sacred temples to tap and go transactions. Banking has always been about trust, convenience and sometimes a little bit of risk. Who knows what's next? Maybe holographic tellers or brainwave active payments? That would be a cool one. The journey of banking shows how humans have constantly innovated to manage resources and adapt to new challenges. It's not perfect, but it is fascinating. Thanks for watching, and if you like this video, don't forget to subscribe and leave a comment. And remember, whether you're depositing grain in Mesopotamia or swiping your phone in Starbucks, it's all part of the same journey. See you next time. Spreadsheets